So good afternoon, everybody. The session of today doesn't want to be long, but I want to bring to attention the major errors that I found and that I find every day seeing mentoring traders and other traders. And I wanted to help you understand those mistakes because the first way to, I would say, fix them is just like, when you know that you have a problem, the first thing is to recognize that you have a problem. And I want to start right away with one of the first errors that traders do. So is not recognizing, and this I see it in so many assets, mostly futures on stocks like mid caps and large caps rather than small caps, is not recognizing laterality, not recognizing that we have a chop. Okay, sideways action chop, laterality is the same thing. Um, so when we analyze the market, you can put trend lines. You can put um, EMAs, SMAs, so moving averages. You can even put MACD or others indicators to help you define, what is a trend. For example, over here, if I put a, I don't know, a 50, okay, and a 20, so I can put over here a 20, I can put over here a 50. It will give me right away, the trend, the short-term trend. If I put over here, for example, a 200 and a 50, is what traders call the golden cross, generally is like with SMA. I can see right away the direction. Now, uh, there's more for me to rather than this. And the point is, there are two major structures to see. One is always the previous trading range. When I say previous trading range, always I mean the previous day high and the previous day low. Okay. So in this case, we have an NQ. NQ will be from midnight, and that's the previous day high. This will be until over here midnight, and this will be over here the previous day low. Okay, so this is the range. Okay, we can actually create even a box over here. This is the previous day range, and we can put this over here square. Now, this is not trading phase, but PDR. The second is analyzing, and both for, again, futures or generally stocks like mid cap and large caps, the pre-market range. So we're going to go over here from midnight. So we're going to take the high to the actually pre-market low. Okay. And this is we can call over here pre-market range. So we have these two boxes. Okay. Um, there are many strategies out there for you that especially come from Forex. Like I studied at Forex a lot, even if I hate that market. But on futures and Forex, one of the major concepts is the time of when market opens. London, New York, Asia session. Okay. So there are three major moments during the day where market receives like an impact of volume of liquidity coming. And that's also used to create strategy using those time of the day. So there are so many indicators, I believe, in TradingView that give you those time of the day, okay? And from those time of the day, you can analyze in brackets, let's say 9:30, et cetera, et cetera, et cetera. But also there are others, I would say, ranges besides this that are important, like generally the first 5 minutes out of the gate, or even the first 30 minutes out of the gate. So the first 5 minute bar out of the gate would be, for example, this one. And then the first 30 minutes, we can do this till 10 o'clock, which is this range over here. Okay, so we make other maybe color the boxes like this. And over here, this is the first, let's say maybe green. Okay. So we have previous day range, pre-market range, first 5 minute, and first 30 minutes. Why 30 minutes? Well, it's very um, widespread that in the first 30 minutes, often we can have reversals of the market. Okay. Over here, it didn't happen because it happened 12 o'clock. Depends really, but 30 minutes is the box that a lot of big players look at. And it's a box that traders, especially institution, will be looking for fake breakdown reversal or continuation breakdown in short. Okay. So this is the first thing. So where are the errors? Okay. This is to tell you where are the errors coming? Are coming from not recognizing that we are in a range. Over here, we have a clear A plus setup in this case, because once we break this pre-market low and we are also below the previous trading range, we have now, imagine all this, we can create over here, let's say another color, all this that becomes an A plus setup, okay? We don't know this will come back up. This could go down even like 1,000 points. We don't know. But this is the range to trade. And from this moment, we have two major plays. Or after the first 5 minutes, generally, it's happening so fast. So all the 50, reverse to 50, the best ones happen in the first 5 minutes. Sometimes 10, 15, but generally first 5 minutes. We have a breakdown, and then boom. Generally, we touch back the pre-market high. Okay? This is called reverse to 50. Or the market fails and unwinds. Okay, so already trading out of this box, pre-market range and previous day range, puts you in an A plus setup scenario. And now I have to introduce a setup, for example, of yesterday. And then we're going to come back over here. Okay. A trader asked me yesterday, um, or maybe it was not yesterday. Um, I don't believe it was yesterday, but let's say over here, in this case, um, we are, remember, in this previous day range. Okay. So you cannot expect to trade over here breakdown around 1030 because it's not going to work. And also, if you're, let's say, shorting over here, you know that that's going to be your previous target. Okay. Just like today, we had this level over here support. We knew that this was the first target. And then we are looking at this level down here. We knew that this was the second target. And also we have another one over here. Okay. So we're looking for those targets, majors, previous levels. Getting back to NQ and finishing what I have to say. The major losses that I see, besides trading in a consolidation, so trading inside the pre-market range or previous trading range, is the fact traders get in the first 5 minute bars. Call it for greedy, call it for like they want to make money. They are like, maybe waiting 12 hours since the previous market trading market day. They want to make money. And maybe you see some guy in pre-market already make good money, you want to do the same. But remember, everybody's different. Everybody has a different strategy. Everybody has a different like edge to attack the market. Some traders will be like very good scalping. Some traders will be swingers. Some traders will be like day traders. If you trade the first 5 minute bar, in my opinion, from what I've seen and analyzing, I would say data from the last, I believe at least the last 5 years, this is one of the major losses from the majority of the traders. Because in the first 5 minutes we see so many um, fake trades. Okay. So my point is always wait the first 5 minutes. And now you'll tell me, Jay, but sometimes I saw the first 5 minute bar that went all the way down. It's fine. If you are in a, I would say, at that level that you can see this and maybe use a 1 minute and on the inside the 5 minute bar, let's say 932, 933, you have an inside bar, a little bit of stuff, anything else, good. Otherwise, wait the first 5 minutes. Not every day you'll be like with an A plus setup to trade. That's the first thing you have to put in your mind. So if you wait the first 5 minutes and you wait that we close below that pre-market range, now it's just about to analyze the second 5 minute bar to see how this opens and it dips and pops. So it actually dips and pops. What it means? It means that it does this and this, or simply is gonna do the opposite over here, pop and fail. Because if we take the pop and fail, guys, then we're like looking for a good short play. Okay. Having said this, you get then in a second range or the first 30 minutes range. So this will be your short, exactly when we reject this, where to put the stop. You can put the high of the first 5 minute bar. Often that will be the VWAP. Often that will be the J-Lance one. It's just like that. So when we use indicators, it's not because indicators are magic. Indicators often will be like the confirmation of a level, of a zone. If those confirmation happen together, then it's a value. Over here, you can see that we have an inside bar, another small bar, pullback. Often these will be, levels where you can actually re-enter on a VWAP or in a J-lines. And look over here what happens. 9:35, actually 10:05, after 30 minutes, you have a free breakdown and push. Over here where we have like, the dip buyers, they are trying to buy the dip. And this is so wrong. Not because over here doesn't work, because you're still buying a stock or a future or whatever you're buying that is still below the open level, which is this level over here. And that also is a big other function. So this level here is the open. Over here, we're going to put open OL. Okay. Not oil, OL. We are still below the pre-market low. So this level over here will be the pre-market low. We're going to point this out like this, pre-market low. So don't you think that when the price will bounce, even if you see over here a big heat map, even if you here see like whole round dollar number, it will have a hard time really breaking that VWAP, J lines, pre-market low, open level. I mean, we really have to have a big reversal in the whole market. Okay, maybe not only in Q, but RTY, ES, YM. So the other three indexes that we see in the market that they're going to push up. And maybe gold is going to push down at the same time. Okay. But otherwise, over here, this is the zone that you have to trade. After the first 30 minutes, we are at this level. Wait again that we close below. So, like you see over here, we're not closing below. This is closing below this level, which is this low. And then, okay, you can actually retrade over here this point. In this case, you can put the stop simply above. Don't use the box up here because in that case, you won't have probably enough R return, even if you look for some big unwind. So when traders lose, is because they don't trade when the price is below that range or can be below the range, remember, and reverse to the upside. They trade when the price stays over here and does this. And they're trying to short, long. Maybe over here we have even a breakout, day long. We are still inside the pre-market range and they get chopped. And in this day, they lose probably an average of 3 per green days. Avoiding this, I would really put you to the test to see how many of you will be probably much more green at the end of the month, eliminating this than all the other type of, losses that you may have. So this is the first point. The second point, and I don't want to be here, bring, I would say, personal experiences of any trader because that's, private. So I'm not going to say the name and anything, but I think it's a good uh, point of interest for, all the traders over here. I'm going to put this. So in this case, we see a month of a trader. Okay. This could be in stocks, could be in future, could be in small caps. But I want to explain over here a few things why of this. So at the end of the month, the P&L is green. So if this trader would have eliminated what I just said, would have probably only one red day. And I'm very sure about that. The second thing is look at the amount of trades, okay? Because that also involves when we have like those chop days, first we insist in taking more trades because then we start being red. Okay. Second, after being already at our max dollar risk per day, okay, we still continue to trade because we think that the next trade, if God wants, if the planets will align with the universe, we'll get like green again. Wrong, traders. Market doesn't give a shit about your thoughts. Doesn't give a shit about if you pray of your meditation. Market stays only after one thing: trapping traders and doing what it wants. So what you can do in order to defeat this, only have your rules. That's the best thing you can do. Look the amount of when the trader over here has good trades, good days. One trade, 17 trades, 9 trades, 14, 4, bad days, 38, bad days, 34, bad days, 28. So it seems over here that the trader, when has good days, right away has good days. Three trades, one trade, 14 trades, okay? But when the trader has bad days, has almost always above 28, 30 trades. So this means that the trader over here has, and this could be anyone, okay? Can be any level. Could be a day, could be a month of 1,000 bucks, could be a month of 100,000 bucks. So we analyze over here how the trader and traders over here that are listening to us can become better is by eliminating those red days in one, not persevering over here. So not continue to overtrade beyond your maximum risk. And this brings us also to how to fix a proper maximum risk. And we're gonna answer that. The second thing is we have to have a number of trades. After this number, we have to stop trading. And you cannot expect that the brokers does because not all the brokers will have this. You can set with certain broker like Cobra, for example, that after 3 trades, they lock you out. Or with other brokers that you can have also max dollar risk per day and they lock you out, but others won't do it. And also, if something happens to that block that maybe for a certain reason doesn't work, you have to be firmly disciplined to simply react and resist the temptation to trade. So that day, where the trader lost over here 450, 230, and 460, this was more than 1,000 bucks. Okay. So this month would have been like 2.6. Okay. 2.6. This is clean. So imagine how much money in growing the account you will save not repeating those errors of anticipation. Sorry, not anticipation, but more overtrading. Second thing is trading in consolidation where there's no A plus setup based on our rules and not respecting the max dollar risk with the broker. Because many brokers, they allow you to go change it. Maybe you don't set up for the next day. Some brokers, they don't even allow you to do this. Okay, so in that case, that's the reason why we work together because also the community teaches you and explains to life if that day is a very good day to trade or not. The last part of our small over here mentoring is the difficulty that has a trader to uh, finish the day and to clear his mind. Now, before I was talking with a good trader, and this trader she made even like a class of breathing and meditation over here some years ago for the room. So I appreciate that. But what I see, and I had a lot of feedback about this, is what traders need to do is not only to trade and that's it, because that's how you can have a very good year or a couple of years, or you're lucky in like a decade. But if you want to prolong your trading activity and not get burned out, like it happened to me years ago, then you need like certain things that you need to control and avoid. First is always check your blood exams. Okay. So it seems like something that doesn't belong anything to trading, but I can guarantee you that blood exam is so important because from that, you will actually understand, guys, what you have to fix. Okay, that's the first thing. The second thing is you have to have a stress release activity. Could be not drinking a beer or sex. Okay, has to be something with you really put. Okay, sex maybe yes, but stamina. You work out. You share, we say, also ideas. Maybe have sparring, do boxing, maybe do tennis. You go swimming. You play basketball. Do something that when you're done, you know that all your adrenaline, because we recharge a lot of adrenaline when we trade. Okay, is simply gone. Because the more adrenaline you have in the body, the more this builds like high blood pressure, anxiety, and that leads to what? To anticipation, not feeling good when you trade. If you're frustrated, you get burned out more, you get more nervous, poor decisions, sleep bad. And that brings you to, I would say, also not good relationship with your family. All of this I had, even more than once in time. I made a ton of money in trading, but I lost also a lot of in health for not being on top of these things. That's the reason why right now, every 6 to 8 weeks, I do a blood check exam, not only for bodybuilding, but also even if I was not doing, I would have still done for this. So control estrogens, control like hematocrit, control like uh, your um, liver enzymes because it's very inherent to the stress, cortisol, prolactin, and you can ask me out. Also, it's very important to look at your, let's say your minerals if you have like some deficit. And the third thing is clean your diet because how many times you eat and you especially eat out of your house and that food that you eat is junk and you feel so shit, so bad. So if you control like what are you eating, if you control what you drink, your trading will be more profitable, and I can guarantee you this. Uh, and also, I believe that if you, when you let's say cheat or eat something, don't destroy yourself. Don't get to the point that you're over drunk. Don't get to the point that you overeat. I never get drunk. I don't like to drink, but some of my friends, even good traders that I work with, they told me they had a big problem with drinking because that was their stress relief, and it's a wrong idea of stress relief. And when they stopped drinking, their trading got much better. In my case, was overeating during the weekend, especially on Sunday when I have nothing to do. I want to relax. All the stress of the week, I put all my, I would say, stress, anxiety into the food. Now, what I do, I changed. I go for a walk with family and I hit the gym every single Sunday and I feel much better. When Monday gets over here, I'm relaxed. I'm more like, boom, energetic and everything. Okay. So you can also write me, guys and gals, what can be, what are your problems so that we can look to try to solve them together. You can or reach out to me in the email team@jtrader.co or simply directly to me in my Discord channel, Jtrader. Okay, so I'm happy to give you help. You can reach out anytime. And I think that if we fix these three things, if you fix these three things, you're gonna be definitely a much better trader than you are right now. Please don't give me feedback. Thank you for being over here. Good luck and see you back tomorrow. Love you all.
Thanks, Jay.
Thank you.